The math, it's inexorable. I guess older people like me need excitement less and profits more. When people say to me, Rick, when's the gold price going to move? I say, year 2000, it was $253 then. Now it's 3,250. The decline in the purchasing power of the dollar, I think, is going to be inexorable. This will merely speed it up. We've talked earlier on your show about what I call the math of America. The fact that the IRS says we have $141 trillion in private net worth, and the current debt is crowding 37 trillion, growing by $2 trillion a year, and the off-balance sheet liabilities exceed 100 trillion, growing by $2 trillion a year. So if you're worth 141, and you owe 130 net, and what you owe is increasing by $4 trillion a year, the problem is fairly obvious. And rather than addressing that problem, this budget exacerbates it. Now, we've talked before, Ivan, about the fact that I think the only politically feasible way out of our problem is to depreciate the value of the US dollar. In other words, honor the nominal obligations to bondholders and to Social Security recipients like myself, while inflating away the net present value.
Right.
The only alternative to that I can see is an honest default, where we say to the bondholders, too bad, so sad, we lied, no money, strong letter to follow. And we say to the old geezers like me, yeah, you paid in for 50, 60 years, so what? There's no money, you don't get any money. That's not what politicians do. So what I think happens is what happened in the decade of the 70s. I think we reduced the purchasing power of the US dollar by 7.5 or 8% compounded for 10 years. So that while we don't reduce the nominal debt, we reduce the net present value of the debt and make it therefore more serviceable with inflated dollars.
Absolutely. Now, moving on to silver and gold, a lot of people are talking about, it's in a consolidation phase right now. It's going sideways. I wanted to ask you, what excites you? You've been in the market for a long time, Rick. You've seen mining companies, 40x, and you've seen like so much in the mining sector as well. What excites you right now at this very moment in the precious metals market?
The math, it's inexorable. I guess older people like me need excitement less and profits more. When people say to me, Rick, when's the gold price going to move? I say, year 2000, it was $253 then. Now it's 3,250. I mean, come on, it's up 11-fold, something like that.
Right.
People want drama in their lives. That's not what I want. I want arithmetic in my life, and I'm getting it. This will be my fourth gold bull market. It will either be the most dramatic or the second most dramatic I've ever experienced in my life. They follow very predictable patterns. They come about when people are concerned about the maintenance of their purchasing power in dollars. People are concerned for good reason. They start with gold. This one started with gold. They move on from gold to the best of the best. The Agnico Eagles, the Franco-Nevadas, the Wheaton Precious. Guess what? This one did the same thing. When the valuation discrepancies appear, two things happen. The value arbitrageurs come down the quality trail, and takeovers happen. That's what's coming next. At some point in time, Ivan, I don't know when, to be honest with you, when the generalist investor is motivated to come into the precious metals because of the momentum established by gold and then gold stocks, when they come into the market leadership changes from gold to silver. I guess because of the lower unit value for silver. I don't know. What I do know is this: when that happens, you won't need Rick Rule to tell you it's happening. Those are really, truly dramatic moves. But, we've had pretty good moves already. Anybody who happened to be in the GDX or the GDXJ in the last 12 months, if they're complaining about something, they need their head examined. This is a very, very, very generous bull market already. And I think, sadly, I say sadly because the things that move the gold price up are usually deleterious to the rest of your life. Sadly, I think we're in, the first quarter or the first third of this bull market.
Do you pay any mind to royalty companies in the silver and gold space, or no? You
I love them. Royalty and streaming is, on a risk-adjusted basis, a better business. Now, you need to understand because they're so efficient, because they have such high margins. Ironically, they're less correlated to the gold price than the lousier companies. And I'm okay with that. You know, if you take away a bit of my upside by eliminating most of my downside, that seems like a fairly good swing to me.
Right.
Ironically, if you're a company like Franco with 90% operating margins, if the gold price doubles, your earnings may be double. If you're a lousy producer with 10% operating margins and the gold price doubles, your earnings go up tenfold. So, ironically, rip roaring bull markets favor the worst companies. I've come to understand that just the beta in a gold bull market, I define beta as the extent to which the gold stocks outperform the market in general, frequently two, three, 400% over 3, 4, 5 years. So if making 300%, I only made 275% instead, but I reduced my risk. I'm really good with that print, Ivan.
Oh yeah, I'd take that any day. Now, there's a lot of people talking online about, and I don't know if you've seen this recently, but they're starting to put fences up around the Federal Reserve in the past day or two. And people are speculating, is it having to do with July 4th, or is there something coming what we don't know about? What are your thoughts on them putting big fences or portable fences around the Federal Reserve?
That's more a social media question. You know, I don't watch movies. I don't own a TV. I can't dress myself. When I watch social media, I'm astonished by all the dumb things people do, and I can't figure them out. If you decide that you're mad at the Federal Reserve and you go down there to take your anger on it, you end up being faced with all these big guys in blue suits with guns. Like, why would you do that?
Right.
Doug Casey says, chaos is interesting. It's fun to watch on a broad screen TV from somewhere else. That's how I'll participate, vicariously at best.
Yeah, no, absolutely. I agree with you. Now, I wanted to ask you more about because there's so many new young investors onto this channel who are looking to get into the mining sector, who are looking to get into precious metals, silver, gold, platinum, palladium. What would you say to them right now as they first get into the market? They don't know where to go, where to start. And let's say they want to get into the mining sector, looking at explorers or producers. What would be your top three tips for them?
The first is start your portfolio with quality. Buy the really good stuff. As we said earlier in the show, the best of the best often generate 300% beta. That's pretty good.
Yeah, I'll take it.
Do the rest of it if you can afford the risk and you're willing to do the work. As you know, Ivan, I've graded tens of thousands of portfolios for free over the last 35 years. One of the things I've learned is that most people own many more stocks than they can logically follow.
Right.
We ask people to spend an hour a month on every stock in their portfolio. If you're willing to spend 10 hours a month, own 10 stocks. And that doesn't mean watching you and I on videos. It means reading the annual reports, reading the quarterlies, reading the resource statements, stuff like that. Also understand that these stocks can rise or fall 15% for no reason whatsoever. And if you can't stand 15% volatility, do yourself a favor, get a paper route or do something, sensible for money. Also, remember that the real miracle of the financial world is compounding. And compounding takes time. If you have an investing strategy that might take 5 years to play out, and you try and employ 3-month tactics to a 5-year strategy,